All right, so welcome everybody to our Social Security in Your Retirement workshop. My name is Lanice Tyree and I am just the moderator. So I will be assisting Brian as you put questions into the chat. Please remember to put questions into the chat so that we can have that engagement when we're ready. If you have any questions between now and 2:05 when this will start, again, just put them in the chat and we'll go from there. So please enjoy this presentation and we'll get started at 2:05.
Lanice, I seem to have got disconnected just for a second. Can you hear me still?
I can still hear you, Brian.
Okay. So we'll wait till right at 2:05 and then we'll get going.
Absolutely.
I'll introduce myself then for everyone who doesn't know me, and we'll be good to go.
All righty, they can hear you. If you want to introduce yourself now, it's more than fine.
Cool. Well, yeah, that's great. So my name is Brian Misterek. I can see from the list of participants, I've know some of you and I've met some of you. So it's good to have everyone on today and good to be here, good to be seen. Thanks, Lanice, for moderating. And I guess I think I cut out for a second, but maybe Lanice mentioned this, but I think what we'll do is starting at 2:05, we'll go right through the presentation, and as questions pop into your head, or if anyone has a question, we've got the chat box live and we're being recorded. So feel free to type questions into the chat box as we go, and I'll either answer it right then or we'll come back to it at the end in the last 5 minutes or so of our time. And then, so yeah, that's usually the best way to do it. For everyone who hasn't met me or seen me around, my name is Brian Misterek, and I'm the VALIC AIG retirement rep for the college. And if I stumble on my words or fall asleep in my chair, we just brought an infant home a couple days ago, so running on a little bit less sleep, but everyone's doing well. So and thanks everyone. So I'm watching the chat box now. I appreciate it. Little baby boy. So and let's see. So we'll get going, like I said, in just a second here, but obviously the presentation is going to touch on Social Security today. So, and maybe even some of you have been through this presentation in years past, but it's always good to review, of course. And yeah, like I said, as questions come up, type them into the chat box or make a note, and we'll have Q&A at the end. At the end of the time. So, like I said, Brian Misterek from AIG, and our connection with Prince George's Community College, for anybody who doesn't know or isn't familiar with us, is that we're one of the investment providers through the supplemental tax shelter plan through the 403B. So in that capacity, we're here as a resource to every employee of the college, so all faculty and staff, full-time and part-time. We're here as a resource, whether it's helping to set up a 403B plan, or, you know, in the bigger picture, our agreement with human resources, and really the reason I love the job that I do and what I enjoy doing and hope to get to do is to meet with individuals who, whether they're just getting started in their career and have questions about how to come up with a savings plan, or if, you know, more topical to our presentation today, if you're getting closer to the end of your career and starting to think about how does Social Security work and how does that fit into my retirement plan, how does that connect with my Social Security benefit, with my pension benefit, and with the savings and investments that I have, and ultimately to go through and work through a financial plan or a retirement plan together. That's where, you know, that's kind of the highest level of resource that we're here to help with, for obviously anybody that wants some help, whether it's just answering a question or actually working through a detailed plan where we're thinking about, you know, outside investments, structuring a portfolio, or so that's kind of the bigger capacity, and through our company we have the ability to do all of that. So whether it's just the 403B or actually working on an entire plan, we also have the ability to implement a plan for people that want it, for people that need help with a rollover IRA, or, you know, a life insurance policy, or, you know, anything in between. So we are ready to go, and we're going to jump into the presentation today on Social Security and your retirement. And yeah, so like I said, we'll go through the slides, and then I think what usually happens is if you have a question, 9 times out of 10 it'll probably be answered as we go, and then if it isn't, we'll come back to it at the very end. So but through the course of the presentation today, we're going to think about Social Security, but we'll do it within the context of a retirement plan and each individual's retirement plan. So as we're going, you can have in the back of your mind your own plans for retirement and your own, you know, income and assets, and we'll try to start thinking about Social Security as it fits into that picture. And so ultimately that comes down to, what will it cost me to retire? And we'll think about retirement planning. We spend a lot of time thinking about retirement planning in terms of cost, and in terms of, you know, just like we live our lives financially in many ways on a month-to-month basis. We'll think about retirement planning in that same way, where we're thinking about, what will my expenses be when I retire? What will it cost me from month to month in retirement? And then how will I fund those expenses? How do income taxes fit into that picture, both with Social Security and other sources of retirement income? So we'll think about the cost of retirement and income sources for retirement income, with Social Security being the focus for today. And then how can we put together a retirement income plan, and then what can we do with the information from today? So we'll start the presentation and frame the presentation for starters here, thinking about the cost of retirement. And, you know, as I start to work with a client and we start to think about retirement planning, and just in general, we start to think about what our expectations are for retirement. And this is, you know, as the data shows, and I find this to be very often the case in my practice, doing financial planning, but a lot of times the expectations and what ends up manifesting as reality are a little different. So 2 good examples of that are, in many cases, when I'm mid-career and starting to think about retirement, and I'll hear this answer that I'll expect to work a long time or have a later than expected retirement, or I'll keep working and don't foresee myself retiring. When in reality, when it gets closer and life happens, that expectation doesn't always meet up with reality. And the same is true for the expectation to work in retirement or continue to work part-time. In many cases, there's an expectation for that, but at least as the data shows us, only 28% of individuals end up working in retirement. And so the main takeaway, at least in that specific thought, is if that is part of the plan, we just want to have that aspect of the plan very clearly mapped out, and even if it's down to the job, the part-time job has already been accepted before retirement. So my favorite topic to hit on and harp on as when I do financial planning is really, and really in my own life as well, is thinking about a budget. And the budget is kind of the most old-fashioned and simplest tool that we have in our toolbox to be in control of our finances, but it oftentimes is the most valuable. And so that's another piece of the planning process. And as we start to think about where Social Security fits in a retirement plan, that's one of the first conversations that we're having is, well, what do I spend every month? And as we go through expenses and we start to think into retirement, the thought may be, where am I going to add to my budget? Whether it's travel or other types of expenses that I didn't have as much of when I was still working. Or in other cases, we're looking at where can I cut back, or where will I naturally spend less as I go into retirement. And so those are all sharpened up. Those conversations end up being much sharper as we start to work through a budget. So this table here is a great reference just to notice a couple things. One, most expenditures and consumption related expenses actually tend to go down through the course of retirement, with the exception being probably obviously healthcare expenses tend to go up. So as we think through a retirement income plan, we can even be as detailed as to look out through the course of retirement. And it's not always just as simple as saying, well, I'm spending $5,000 a month on day one of retirement and then adding a 3% inflation rate to that amount. In some cases, we're looking at cost of living through inflation going up, but cost of living going down through consuming less through the course of retirement. So these are all just great data points to have in the back of our mind as we're thinking through a retirement plan. Once we have a budget, we can move on to starting to think about, how am I going to pay the bills in retirement? And in some ways, it's not much different in that I've got a budget, I've got monthly expenses, and now I've got money coming in. The thing that does change and does actually make a bit of a difference is really twofold. One, in most cases, instead of giving. Yeah.
I apologize, but your screen is not sharing. Oh
no.
Participants need to see the PowerPoint that you had. Could you please?
Let's try again.
Yeah.
Thanks for interrupting me. I thought we were shared.
Okay.
Actually,
Brian, could you do me one favor? Could you back up to your first table? And it's okay if we go a little over time, but I do want to make sure the participants see your first table that you were talking.
Yeah, let's do that. Can everyone see now, first of all?
Yes.
Okay, so let's do that. I'm going to back up and just quickly run through the slides that we just touched on.
Thank you, Brian.
Thank you. Okay, so here's the two slides that we missed with information. The first was like we talked about, the difference between expectation and reality when it comes to retirement. So whether it's the expectation of a later retirement or planning to work in retirement. And then we've got the breakdown of average expenditures, average household expenditures, and the way that those expenses tend to decline over the course of retirement. And I can make these slides available after the presentation as well. So, and then now we're caught up. So coming back to starting to plan for retirement income. Now that we have a budget, we're looking at really two important changes that are going to happen. One, even though it seems a small thing, it can be a big shift, which is that starting when I retire, I'm used to having a paycheck in most cases every 2 weeks or twice a month. And in most cases, when I go into retirement, my retirement income comes on a monthly basis. So just from cash flow management and planning when to pay bills, that can be an adjustment and can be something that's really helpful to think through ahead of time. And so for the average individual, now this chart shows the average individual, and it'll look different, of course, for everyone. But for the average individual, my income is going to actually probably break down between three sources, which would be Social Security for almost everybody, a pension plan for many people, but not all, and then income from withdrawals from my savings. So whether that's my 403B plan or an IRA or other outside savings or investments. And then in many cases, that's supplemented through continued work and through earnings. And so in some cases, that's because I've planned to and I want to work part-time in retirement. And in other cases, it's because I didn't plan well and I'm 2 years into retirement and have the realization that my Social Security and my pension check aren't enough to make ends meet or cover the lifestyle I want. So I've got to go back to work in some part-time capacity. So by doing a good job planning and saving into the 403B and more importantly, budgeting and planning ahead, that's a big deal that we can eliminate going back to work part-time unless that's something that's a goal or that is a want to and not a have to. Let's get into the basics and the specifics around Social Security. First three fundamentals, just to point out. One, the Social Security program is funded through our payroll taxes, through FICA tax, and through self-employment taxes if I'm self-employed. Minimum eligibility for a Social Security benefit is 40 credits, which translates into basically 10 years of full-time employment. And then full retirement age, take a second and just notice, if you don't know it off the top of your head, you can find the year of birth, your year of birth, and then your full retirement age will correspond to your year of birth. So if I'm born before 1955, then my full retirement age is 66. And 1960 or later, my full retirement age is 67. And then if I'm in between, it's going to be somewhere in between. So something to just point out and keep in mind as we plan for Social Security is that Social Security is is different than a traditional pension in that my pension benefit through, in our case in the state of Maryland, through the teacher's pension system or the Maryland pension system, my pension benefit is going to correspond directly with my salary. And so when it comes to planning for retirement and making sure I duplicate my standard of living, I know my pension benefit is going to replace some fraction of my salary. So if my salary is higher, my pension amount will be higher. If my salary is lower, my pension amount will be lower, but it's going to replace a fraction of my income. Now, Social Security is different in that as I make more money, my Social Security does go up, but it doesn't go up correspondingly. So that if I'm making income at a higher level or the higher level as Social Security calculates it, the higher my income is, the lower as a fraction my Social Security benefit is going to replace. So if my goal as I go into retirement is to replace 75% or 85%, 80% of my salary with retirement income, then all else the same, if I have higher income, my Social Security, my outside income sources will need to be higher because my Social Security replaces less. Just a quick PSA for everyone, and this next slide is really better. But if you haven't done it, at least you've probably noticed that you don't get a Social Security statement, at least on an annual basis, in the mail. And so Social Security has mapped over almost entirely to doing statements and many transactions for that matter online. So the sooner the better. It's worth going out to ssa.gov and taking the time to create a My Social Security account. And that way you can view your statement. So if we're gonna have a planning session together, you can have a Social Security statement handy, or just to start thinking about for your own benefit. You can have an accurate statement, and then you can also review your earnings history as it's being reported to Social Security to make sure that's accurate. And you can also, it's also just a useful tool for identity protection to make sure you're the one logging in and creating a password so that someone else isn't doing it. And then when it comes time to file for Social Security and potentially for Medicare, you can do it right through the website in most cases as well if it's a straightforward Social Security situation. So the sooner the better to go out to the website and register is well worth the time. So the big question when we start to really think about Social Security in detail is, when should I start taking my Social Security benefit? And it's not always a cut and dried answer that I should take it at my full retirement age, which we remember from a couple slides ago, or take it right at 62. There's no one size fits all answer to when to start taking, but it is good to remember that I can take my Social Security whenever I want. There's going to be some restrictions and costs and benefits that are going to push me one way or another. But that being said, I can file for Social Security at any point as long as I've turned 62 and I have those 10 years worth of credits or 40 credits in the system. Now we'll go into more detail as to how the benefit is calculated, but ultimately what we're looking at is a linear progression between age 62, which is early retirement from Social Security, and then each month that I choose to delay and defer my Social Security, I'll get a little bit more for waiting up to my full retirement age at 66 and 2 months for some people, and then even past that all the way till age 70. So when we're working through a planning session, we're thinking about a lot of different factors when we're thinking about when should I take my Social Security benefit, when's the rest time, when's the best time for you. But a couple of the more immediate thoughts would be health and family longevity. So if I have a long life expectancy, then having that guaranteed lifetime income that's higher might be advantageous. Or current cash needs. You know, if I'm ready to retire at 62 and I need Social Security to supplement my pension to make sure I'm covering all my current cash needs, that could be another reason to file early. And other sources of retirement income can be a big influence as well. So this is a lot to say that it depends on your individual circumstances, but when it comes down to it, it is a quite flexible benefit. So as we build out a plan and think about your specific goals, or as you're thinking about your goals, you can really fit Social Security into your plan in a way that takes the most advantage of the benefit that you've paid into. So like we said, there's really, we call it 3 different options here because it's slightly different at each phase, but really it's any point between 62 and 70. And we touched on a couple of the reasons I might file early which would be at age 62, and early would be considered anytime, to back up a slide, anytime between 62 and full retirement age would be considered early. And so there's not a lot to that besides it's the term that we'll use for now. But early is really any time between when I'm eligible at 62 and I hit full retirement age. Full retirement age is my 100% benefit. And then after that, a lot of times we forget that I can go past my full retirement age and still benefit from waiting. So
Brian,
yes, ma'am.
You have a question. How many credits did Brian say I needed to file?
Yeah, it's 40 credits. And if I work full time for a year, I'll earn 40. I'll earn 4 credits in a year. So it usually ends up working out to be 10 full-time employment, 10 years of paying in to Social Security gets me to eligibility.
Thank you, Brian.
Thanks for coming in. That's perfect. And so full retirement age, just to review, because this is the number that I'll see on the front page of my statement, and it's called 100% of my Social Security benefits. But the most important factor when it comes to thinking about full retirement age is that this is the age at which I can work and collect my Social Security benefit. So in other words, if I hit age 62, that means I'm eligible for my Social Security benefit. But if I'm still working full time, then it's likely that I'll pay a penalty on my Social Security income if I choose to file early. If I'm retired and collecting a pension but not working and having any earned income at age 62, it's totally fine. There's nothing wrong with taking Social Security early. But if I'm still working, the simplest way to think about this is that if I'm still working full time, I should wait at least until my full retirement age to take my Social Security income, you know, with some few minor exceptions. But the best way to think about it is, as long as I'm still working full time, I should wait at least until full retirement age. If I'm still working full time and plan to continue to work past my full retirement age, then we can at least visit the conversation as to, well, should I take my Social Security and add that to my full-time income and maybe boost my savings into my tax shelter plan, or use it to pay off my mortgage over the last couple of years of while I'm working and collecting Social Security. So that's a conversation that becomes available to us at full retirement age. So that's really the big significance of that age that we found earlier in the presentation. And then there's the option of waiting past full retirement age. You know, a lot of times this waiting past full retirement age can be a good option if maximizing my lifetime income is my goal. So if my goal is to maximize my guaranteed income, so that would be, to contrast that would be different than if I have savings in an IRA or in my 403B that are non-guaranteed and are in the market or just in a CD, or if I have cash that I'm using to fund my retirement. Obviously, when those accounts hit zero, and
Brian?
Brian, are you there?
Brian, are you there? I apologize, everyone. We have a bit of a technical difficulty on our presenter side. Just give us a second and we'll get him right back.
I think in response to the question about part-time, I think if you make, I think it's over 26 or 28,000, they start penalizing before your full retirement age.
Brian, if you're still here, I need you to unmute yourself.
I think my screen stopped sharing, didn't it?
Yes, it did.
You're back.
So if you don't mind going back to, just go back maybe about 5 or 6 minutes.
No problem.
Thank you. We did have a question in the chat, and one person said you might have fallen asleep, which is actually really funny.
I actually did see that. I didn't fall asleep. I think I was here talking to myself, but.
But if we could go to Earl Williams's question, am I able to draw my pension and still work without a penalty?
Yeah, so pension is going to be different than Social Security. So I can draw my Maryland teacher's pension when I'm eligible. So let's say I hit 30 years of employment, I can take my pension, and then with some minor restrictions, I could come back to work in the state, whether it's at the college or elsewhere, and I'm totally fine. Or go work somewhere else and I'm not going to be penalized. It's with Social Security, which maybe I cut out for this aspect of full retirement age, but full retirement age is just to review if we didn't get through this. Full retirement age is when, as it pertains to my Social Security income, I can now draw my Social Security and continue to work full time. So anytime prior to FRA, to full retirement age, which is like we called early retirement, if I'm still working full time, I need to think twice about taking my Social Security income, because it's likely that I'll end up paying a penalty.
Does that apply to part-time? And then I have another question for you.
Yeah, and we'll hit on that in more detail, but it does potentially apply to part-time up to full retirement age. There's going to be a cap on how much earned income I can have, which is approximately $19,000 per year. So let's say I'm 62 and I want to at least consider retiring and taking my Social Security, then I can go back to work part-time, but I just have to be cognizant of how much income I'm earning. And it's approximately $19,000 is the cap before I start paying a penalty on my Social Security income. After full retirement age, after FRA, that concern goes away and I can work full-time or part-time without having to worry about losing any of my Social Security income.
Okay, one more question. When can an older spouse who takes his or her Social Security take the half benefit of the other spouse? Is there a limit on the income level?
Yeah, so that's a great segue here very shortly, and we'll talk about spousal benefits and the rules for spousal benefits. So hold tight, and we'll come to that in detail in just a minute here. Thank you. And so, so just to kind of re-illustrate the thought here, I can take my Social Security anywhere between 62 and 70, and now the amounts here aren't going to be applicable to everyone, of course, but let's just say my full retirement amount is $1,000. Then if I decide to take it early, and you'll be able to see this in detail on your own statement, but it's about a 25% difference if I take my Social Security right at 62 versus waiting until full retirement age, versus deferring all the way till 70. And just one more note on if I decide to wait until age 70 to take my Social Security. If I decide to wait, it's always worth pointing out, most people know this, but it's certainly happened a few times where we would think that right at 70, now that there's no longer a benefit, I'd just automatically be enrolled. But it's not the case. I've still got to, if I wait till 70, I've still got to make an appointment with Social Security and enroll, or go online and file for my benefit. Now, one useful tool when it comes to making this decision between waiting versus filing early is there is a mathematical break-even point. And that is if I take it at full retirement age versus waiting until, or if I file early at 62 versus waiting until full retirement age, the total amount the cumulative amount that I will have collected in Social Security benefits breaks even at age 78. So if I'm just looking at it from a mathematical, get the most that I can from Social Security, then I know in the back of my mind that if I'm going to wait to full retirement age, then I'll break even if I live past 78. And if I decide to wait until 70, then I'll break even if I live past 82. And so if I live to be 100, then anything past age 82, I'm coming out cumulatively at least well ahead for having deferred and waited. So spousal benefits. Now, many of the provisions as it relates to spousal benefits have been eliminated in order to shore up Social Security a little bit, and it makes the spousal benefit conversation much simpler, which is when it comes to spousal benefits, if I'm married, I ultimately have the choice between, like the question was phrased, I have the choice between my own Social Security benefits, the amount that's on my statement, or 50% of my spouse's benefit, or the equivalent of 50% of my spouse's benefit. Because if I do choose to take the spousal benefit, which the only reason I would choose it is if it's higher than my own benefit, my spouse doesn't lose any of their benefit. So if she's making if her Social Security at her full retirement age is $2,000 a month, then I've got the choice between my Social Security and $1,000 a month. So if I choose the spousal benefit in that case, then I'll receive $1,000 a month and she'll receive $2,000 a month. So our household Social Security income will be $3,000 a month. And so it really does come down to just a comparison between my own benefit. So if I look at my statement, and in most cases, this is because one spouse or the other has a gap in their work history that drives their Social Security benefit much lower. So if I'm out of the workforce for an extended period of time, then my Social Security benefit might only be $750. But since my spouse, since her benefit is $2,000, I have the choice between my own, which was $750, or the spousal benefit, which is 50%, the equivalent of 50% of hers, which is $1,000. So I'll take the spousal benefit. So it's always worth looking into, but in most cases, if we have two spouses who worked a full career full time, then it's going to end up being both filing on their individual record, their individual benefit. A couple of additional asides here. If I was married for at least 10 years, but I'm divorced and not remarried, I'm still eligible for a spousal benefit. So it's worth, again, looking into. And at the end of the day, it all comes back to looking at which option will be higher, and choosing the higher option. I think maybe the question was asked, but it's also worth pointing out that the spousal benefit, if one spouse is younger, so let's say at retirement, my wife is 66, her full retirement age, but I'm 62. So I'm eligible for a Social Security benefit, let's say that I'm going to take the spousal benefit. It will be $1,000, and then it'll be reduced because I'm ahead of my full retirement age. So just like my own benefit is less if I file early, the same holds true for the spousal benefit. Lenise, I'm just gonna do a check-in and make sure that I'm still sharing and everyone's still hearing me.
Oh, you're still good, I would tell you. We do have some questions. We do have some questions, so whenever you're ready, just let me know.
Yeah, I'll grab a question or two. That's great.
Okay, so let me scroll up just a little bit. We talked about the spousal benefit. I feel like that you did answer that question. You did answer the question about taking out money prior to the retirement age. There are some individual questions that you will need to email Brian directly about, and we will provide his contact information, of course. But this one from Lynette: if my husband has an ex-wife whom he was married to for over 10 years and she has never remarried, is she eligible for his benefits even though he has remarried?
She is eligible, with the caveat being that he would never have to even actually know. So because the spousal benefit doesn't affect the other individual's benefit, the only thing I need to file for a spousal benefit is if I'm married, then I simply need my spouse's Social Security number. And with an ex-spouse, I need the Social Security number as well as a marriage certificate and a divorce divorce decree. So that shows I was married for at least 10 years. So as long as I have that information, I can file for a spousal benefit without my spouse even knowing, because it won't affect their benefit in any capacity. And similar to, but a little bit different from a spousal benefit, and perhaps a more important planning tool, is the survivor benefit, which is, to put it simply, if I'm married, then and my spouse passes away, I'm eligible to switch over to her benefit at 100% of whatever she was receiving. So oftentimes we'll use this as a planning tool when I'm doing planning with a couple, with the household, and we might have one spouse, perhaps the spouse who had a slightly higher income or a higher Social Security benefit. Even if their life expectancy is not long, we might have them delay their Social Security if possible until age 70 and maximize their benefit so that if and when they pass away, the surviving spouse can switch to that much higher benefit. So a good example of that would be if I'm planning with a couple who are both, let's say at age 66, one is eligible for $2,500 a month and one is eligible for $1,500 a month. So the cumulative benefit is $4,000 a month. And what we might do is instead of having them both file at their full retirement age, we might have the higher Social Security spouse, so the $2,500 a month, defer all the way until 70. And so we've got to fill in that gap of time where they're not getting that $2,500 a month. But we might have them defer until 70 when their benefit will be approximately $3,300 per month. And now the household Social Security benefit is higher, but what also happens is when that spouse, especially if it's an older spouse, passes away, the other spouse who is getting $1,500 a month gets to refile and switch to the $3,300 a month. So it can be a tool to create a level of life insurance protection.
Brian, we have another question because you're in the same realm. We have, my husband passed away last year and never collected any benefits. Am I eligible to receive any of his benefits?
Yeah. Yeah. So you're eligible when you hit age 60, you'll be eligible for a survivor benefit. And so at age 60, you'd be eligible. Now, the same kind of caveat holds true, which is that between age 60 and full retirement age, if I'm collecting that survivor benefit, it would be penalized if I'm still working. But that's the one difference with the survivor benefit is at 60 I'm eligible, and it's off my age. And so if my spouse passed away before filing, we would look at their primary insurance amount, which is their full amount, and could get an estimate off that. And then at 60, I'd be eligible, and then that amount would go up a little bit each year till full retirement age. And so one thing that oftentimes we look at, I've got a client who this is the case for, in that her husband passed away, and she's retiring next year at age 60. And so she'll take the survivor benefits. So she'll take her husband's Social Security at 60. And then she's going to take that benefit until she turns 70. And at 70, she'll switch to her own benefit, which will be higher because she's deferred to 70. So that's one unique feature of the survivor benefit, is I can switch from collecting a survivor benefit to my own benefit if I had never filed for my own benefit, because it continues to earn those delayed filing credits, and I can switch over and take my own when it surpasses the survivor benefit.
So Brian, you've got about 8 minutes left. I do want to make sure that we get through your entire presentation, but we also still have a few questions in the chat. So I just want to make sure you're aware of time.
Well, let's do this. I've only got a couple points here on Social Security, and then I'm going to jump up to the conclusion and take questions, because the last bit of the presentation is more tying Social Security back into planning, and I think we've touched on that. So I'll just hit on a couple more points on Social Security and then jump to the end and take questions. and leave my contact information as well, because like I mentioned at the start, a lot of this we can really work through in individual consultations and figure out exactly how it works for your individual nuanced Social Security scenario. So one thing just to touch on here is that's important as we plan, especially, is my Social Security income will be taxed. Now, a couple things to point out. One, it's taxed at a lower rate than my pension income, for example. So that's important. And two, the state doesn't tax my Social Security income. So my Social Security is taxed. So when I look at that number, it's not entirely worthy for planning, because I still have to figure out, okay, my statement says if I retire at full retirement age, I'll get $2,300 a month in Social Security benefit. But just like with my paycheck while I'm working, I can only spend what comes in after taxes. So part of the planning process, of course, is thinking about how does that $2,300 a month on my statement translate into after-tax income that I can use for my expenses in retirement. So this table goes into the details of exactly how it's taxed, but suffice it to say for now, it is taxed. It's not taxed by the state, but it is taxed by at the federal level. However, it's taxed at a lower rate than other sources of income, like withdrawals from IRAs or 403Bs or my pension income. We'll do a quick on Medicare A and B. The quick information that's useful to have here is, one, at 65, Medicare is much simpler, but at 65, I'm eligible for Medicare. If I'm still working and covered through my employer's plan, then I don't necessarily need to file right away, but I can file for Part A. There's no out-of-pocket cost for Part A, which is my hospital insurance. However, if I'm retiring, I'm 65, then I need to file for at least Part A and Part B, which has a standard out-of-pocket monthly premium of about $150 a month. That covers now the core of my health insurance, my medical, doctor's visits, and hospital insurance. And then I'll build a healthcare plan around that, whether it's supplementing through an employer like Prince George's Community College has a good supplemental option depending on how long I've worked for the college, or shopping around through Part C and different types of Advantage plans, or getting prescription coverage through Medicare Part D. So again, these are all factors that, as we work through an individual plan, and but definitely, if anybody, I'm here to meet with anybody who wants to. So for everyone who wants to work through a plan and go through each of this in detail, we'll make it work to meet together and discuss each one of these ideas in detail and how it actually pertains to you. I can, if I have filed for Social Security and realize I shouldn't have, I have a year to change my mind. So I'm going to actually jump through the financial planning and open up for some follow-up questions. And now is also the time. We can schedule the meetings, the one-on-one follow-up meetings in it, however you guys want. If you just want to grab my number or shoot me an email, that's perfectly fine. But it's also a good chance to grab your phone, and we're all probably have tried this maybe a little bit, but if you grab your phone now, you can either just take a picture of my contact info, and I think we'll send that out as well. But you can grab a picture of my contact info, and then also if you open the camera app, it'll and hold it up to the little QR code. That'll take you directly, if you click the link that automatically comes up, that'll take you right to my my calendar for next week, so you can schedule a meeting that way if it's convenient as well. But let's use the rest of the time that we have for some questions. And I'll watch the chat box, and Lenise, you can, whatever you think is best. But let's spend a few minutes on questions.
Okay, so we're gonna scroll up here a little bit. What does after primary files mean?
Yeah, so I think that's referring back to the spousal filing options. So the main thing to realize there is if I am planning to take the spousal benefit rather than my own benefit, then I have to wait until, they call it the primary, but that would be the spouse who's taking their own benefit. They have to have actually filed before I can then file for my spousal benefit.
Okay, our next question. So what you're saying in the previous scenario is that the husband's benefits will not decrease, correct? What role
That's correct.
Okay, so what role does taxes play in that?
Well, ultimately, we're going to figure out if it's just an individual, or more specific to that question, if you are or we are making a Social Security plan and planning for a household for a couple, then we're going to look at combined Social Security income, and we're going to add that to whatever other retirement income sources there are. And then we'll figure out what the after-tax Social Security amount is. So both Social Security and both my Social Security and the spouse's Social Security benefit are eligible at least to be taxed.
Okay, our next question. I am 36. How will retirement affect me at the age of 62?
Yeah, so good question. So Social Security, this is maybe something that's worth at least touching on a little bit, but something you'll hear referred to is the uncertainty around the program in general, around Social Security in general. And basically referring to is the fact that the Social Security benefits that are being paid right now are being paid through all of our FICA tax, all of our wage taxes. So the taxes that come in go out to current recipients, and there's different projections, but around 2030, based on the current rate of people entering the workforce and leaving the workforce, there won't be enough Social Security tax coming in to go out to pay the Social Security benefits. So all that to say, there is some uncertainty, especially as we map farther out regarding what Social Security will look like. And so it's worth, I think the farther out retirement is, the longer I have to plan ahead and just plan ahead. Some people will take the strategy that I want to have a good plan for retirement without Social Security, and then I'll just view that as extra income. So especially when Social Security is way out there in the distant future, it's better just to think of it as, well, let's do as much as I can control between saving and whether it's saving for retirement or working to pay down a mortgage or things like that.
All right, Brian, so that's going to conclude our presentation today. Everyone, his contact is on the screen. Please email him directly for any of the questions that I was not able to get to. Brian had a lot of information to share. And Brian, we want to thank you for doing this presentation as part of CPD and E-Day. And everyone, enjoy your next session.
Thanks everyone so much. Thanks, Lenise, and look forward to meeting with everyone who wants to meet.
Thank you very much, Brian. Thank you.
Thanks everyone.
Okay, bye-bye.
Thank you.
Bye.
Have a good one.
Can you presentation to all of us?
Bye.
So the
Yeah,
presentation will be
I'll work on formatting the presentation in a way that I can send it out. Send me an
Anything
email
about
if
attendance?
you'd like to see the presentation.
Yeah, everyone, it will be in Cornerstone. It will be in Cornerstone. And additionally, we will get it sent out to everyone that was a part of the presentation today.
Thank you.
Perfect.
Okay.
Thank you, everyone.